What's up, everybody? Steve Pletz of Steve Pletz and Team here with my business partner Thad Clendenin, talking all things real estate. And these days, there's been a lot of shakeup, both in the real estate world and it feels like in all these other subsequent worlds. Today, we've got a great guest, Amber Ramirez of Farmers Insurance, talking specifically about a world that has changed quite a bit. So Amber, can you start, maybe give us a little bit of background?
Sure. Well, my name is Amber Ramirez. I have an office in Ramona on the corner of 6th and Main Street. It's been in my family over 50 years, so I kind of took it over from my parents once they retired, and I've actually been doing it 20 years. And yes, the last 3 years have been probably the most difficult that we've seen. Changes happening with the home and the auto.
So let's talk about those changes. Go back 3 years, kind of what has changed, and give us why do you think things have changed so significantly?
So I know it takes 6 months to sometimes years for insurance companies to file a rate increase with the Department of Insurance and before it gets approved. So meanwhile, insurance companies, they are businesses, and they are not getting the profits that they are wanting and needing to continue. So what has happened over those 3 years is insurance companies have been pulling out of the state, non-renewing policies, and just limiting the pool of insurance companies that we have to go to. So I'm a Farmers agent. My contract is with Farmers. However, I also have a brokerage. So if Farmers doesn't write it, I have a pool of other companies we can go to. And that pool has diminished from 3 years ago, 15 companies I could go to now there's about 4.
Why?
So,
I'll let Thad jump in, but I guess what has changed? I mean, 50 years, I'm sure, in the industry, you've seen lots of things change.
Mm-hmm.
Why so significantly, and why now?
So because of the losses in the state of California, when we have a wildfire, the cost of construction, the cost of materials, contractors' rates significantly increase. Rental properties, to rent a property while their house is getting repaired or rebuilt, significantly increase, therefore putting more and more pressure on the insurance company for higher payouts.
I love it.
So I'm probably going to get an insurance increase just for saying this.
Probably.
But so California Fair Plan, right? I always found that the most ironic name in the world because there's really nothing fair about a forced insurance plan. But I know in our market all the time now we're running into situations where, policies are getting canceled, just kind of, I don't want to say out of the blue, but unexpectedly, or when you're writing new policies and people are trying to close escrow on a house. Lo and behold, the fair plan becomes a situation. A lot of people don't understand it. So if you could kind of, I guess at a higher level, just explain to us what that looks like, that marriage between the fair plan and the traditional insurance.
Sure. Now, a lot of people assume that because it has the name California in it, it's government run, and it is not. So there's a number of states in the United States that have the fair plan. Like, for example, Louisiana has a fair plan, Florida has a fair plan, and it's just for hazards or situations that maybe insurance companies don't want to fully jump into, protecting from hurricane and tornadoes. There's just too much of a risk for that. So what the fair plans do in all of these states, California has one for wildfire because that's our biggest threat. What they do, the fair plan does, is it pools all of the insurance companies who are writing today in California that will write a home policy. It makes them participate in their market share that they have in the state of California. So for example, let's say Farmers has 35% market share. They're going to participate in 35% of the losses, the profits, the claims, all of that, whether or not they want to. That's what they're forced to do.
Well, good. So it's unfair for the insurance companies.
So it is unfair for the insurance companies because they don't want to. But in order to continue writing some of the premier policies, they have to.
Got it.
But a lot of people, like I said, assume that it's government run.
I always did.
And so it's an exchange company. So because you have all of these companies going into this exchange company, you have another company running all of that, running all of the profits and losses, basically managing it. It is at a much higher rate than a straight
You used a
homeowner's
term there
policy.
that I'm not familiar with, a premier plan. What's a premier plan?
So a premier plan is one where you can go to an insurance company and get an all-in-one, like what's called an HO3 policy or a homeowner's policy, where it covers fire, theft, vandalism, water losses, all of that in one policy. And you don't have to navigate to another policy in order to get all of
I
that
see,
coverage.
and that's where the California Fair Plan plugs in, is the idea being that from the real estate side, if somebody is purchasing a property, they have to have fire insurance if they have a loan on the property. That's what the lenders require.
Correct.
And so a premier policy would be, hey, this includes everything, where the California Fair Plan essentially would be, hey, farmers will write the flood, we'll just say, or the water damages or something like that. But
Correct.
farmers are saying, we won't write the fire.
Correct.
That you have to get through the California Fair Plan.
That's
and so,
right.
And so the North County Inland market is a different market, so I get to learn about it. And I feel like what you're saying then is that is that pretty common in your market?
In my market today, it's very common for us to have to utilize the California Fair Plan. But one thing that, I want people to be very careful of is they need to get a broker who is familiar with the Fair Plan, because it's a cafeteria plan. Basically, we choose what coverages and we choose what dollar amounts go into that. So for example, I have seen policies with the Fair Plan that don't have any coverage on other structures. Well, you may have a detached 2-car garage, that's where it should be insured at, but because the broker or the agent isn't really familiar with the Fair Plan, that's left out. So if there is a loss, the insured's gonna be very mad.
All right, let's talk California Fair Plan then, because this is valuable for me, because I had always thought that the California Fair Plan was the same across the board. This is the first time I've heard used the term the cafeteria. I had assumed that if I owned rural property in Julian, or a property that State Farm dropped me for my house in Lakeside, and both of them had to go California Fair Plan, that those were the same. You're saying they're not?
The coverages that are listed on the California Fair Plan are not the same. So we
Interesting.
check a box and, dwelling amount. When we start off, the dwelling amount should match your farmer's policy or whoever the companion policy is with. However, at that point, personal property, sometimes insureds are like, we don't have that much personal property. Other structures, sometimes people don't have other structures, therefore we wouldn't put it on the Fair Plan policy. But there are a number of situations that I have seen where they do have other structures and that agent didn't pick up that coverage for them.
I think that's the wild thing about our industries is, there's so much to real estate. In some ways, in my mind, real estate's super simple. In other ways, it's rather complex. But it's beholden to obviously having the right agent, asking the right questions, but also the buyer or seller being pretty fierce in sense of vetting the
Right.
questions they need to ask. And like what I get with insurance a lot too is they'll maybe not know that they need to answer or ask these questions and not get the answers to those questions. Then all of a sudden they get a policy that's short. And I know we saw that a lot, you much more than me, but just on the periphery when the 07 fire happened in Ramona, there was a ton of people that were like underinsured, and to your point, had outbuildings or shops or whatever with classic cars in it and burned, and they weren't
So
insured.
it's sounding to me like a takeaway is, we always talk about, on the real estate side, about working with a local pro. Working with somebody that, if you live in Ramona, work with somebody that knows Ramona, because as we've talked about, horse property is different, easements, septic tanks, wells, these different types of things.
Right.
But also what I'm hearing is, on the insurance side, it's the same thing. Even though I don't know your license, I imagine you can write policies in all of California, as we can sell in all of California.
Correct.
But probably you're most knowledgeable when it comes to, there is a benefit to having a local pro, yes?
There is, exactly. In the event of a claim, you have like an office or a storefront that you can walk into to help assist you with that. Not to mention, we know a lot of the hiccups that can happen with insurance. So when someone calls into my office, like I had mentioned, my contracts with farmers, we try a straight farmer's policy or a premier farmer's policy. If they say no, then we broker it out to a couple other companies to see if we can get them something before the California Fair Plan, because it truly is supposed to be a last resort. However, that takes time. So it's all the time that we need this to our lender by tomorrow. And we like to have 2 to 3 days. Sometimes we can put everything aside and assist someone, but the goal is to be at least 2 to 3 days to give us due diligence that we can check other companies. Otherwise, we're rushing to help you get the sale of this house.
Yeah, it's just about kind of consummating the whatever situation is
Exactly.
urgent. You know, one thing I learned here recently from a recent transaction too with a lender was, you know, for those of you that aren't familiar with impound accounts, that's basically when your mortgage payment, taxes, insurance, you know, everything, HOA in some cases is put into your payment altogether collectively. And what I didn't realize was sometimes the FAIR Plan, I don't know if this is specific to the carrier, because I always thought the FAIR Plan was a government
Me
thing.
too.
For one,
Me
I thought
too.
it was one.
Yeah.
I thought it was the evil empire, right?
Right.
But now that I know it's not, which was super, that's probably the biggest thing I've taken away so far. But with that, this recent scenario, the lender wasn't able to impound the FAIR Plan percentage, if you will, or whatever,
Interesting.
of the insurance within that payment. So that was something important, obviously, for the clients to know, because they have their mortgage, taxes, insurance, you know, their main insurance, for lack of a better word. But that FAIR Plan, they were going to have to pay out either annually or semi-annually. So that's something else. I don't know if you run into it.
Right. So for new business policies with the California Fair Plan, for whoever, the insured or the client, the new purchaser of the home, has to put the 40% down to start that policy. They will not bill escrow for any condition.
For
on
the
that.
annual premium.
For the annual premium.
So a round number, a California Fair Plan might be what, $5,000 a year?
Could be 3,000 or 5,000.
Okay,
Yeah.
so if it's $5,000 a year, 40% of that would be $2,000 that they would need to provide up front.
Correct. For us
Hey.
to issue that policy, to get it to the lender for the mortgage to go through and the house to sell. Now, the following years, we can bill everything to escrow. That's
Yes.
not a problem. I'm sorry,
Right.
to the mortgage company. But that initial, and that's something a lot of people aren't aware of either. They're like, well, we put all of our money aside, you know, to
Absolutely.
do this.
And that's a big thing that comes up all the time. Moving expenses,
Absolutely.
you know, all the things.
Debt
people
to
are-
income ratios, if we have a situation where a lender is barely able to make a buyer qualify and we're asking the seller to cover some closing costs or something like that, $2,000 is a significant dollar
Oh, yeah.
amount, certainly depending on the price point, those kinds of things. This is so good. All right, let's talk a little bit more about California Fair Plan. You had said, and I just want to make sure that I have it correct, that the losses, let's say I own a property in Julian, wildfire happens, I am on the California Fair Plan, and it gets totally wiped out, the insurance carriers, the farmers, the state farms, all states, etc., you're saying they share in that loss. Is that correct? Okay.
And so you don't know what adjuster you're going to get that comes out to that loss either. So it could be randomly a farmer's, it could be randomly a state farm adjuster that goes out to handle that claim.
Interesting, very
Very
interesting. And so,
Marxist.
and
Very Marxist.
so then with that, let's talk about what has happened more recently, which is now most recently, and I'll get this wrong, but you can correct me, is State Farm and Allstate had said recently that they're not writing new policies. They will continue to service the people that they're servicing. It's not like everybody's getting non-renewed or anything like that. The existing business, they will continue to work. However, what they have said is, at least temporarily, in the entire state of California, they are not writing new policies. Yes?
That is correct.
So if there are, I'm going to make up numbers here because I'm a
Okay.
realtor, that's what we do. If there are 15 insurance big carriers that are going to split that California Fair Plan, is State Farm and Allstate, are they now stepping out of that? Or how does that impact the world, I guess?
So in order for them to continue, this is my understanding, in order for them to continue having home policies in the state of California, they still participate by their market share. However, what they're doing is they're limiting their market share. So
Right.
today they might be 30%, and next year they might be 25%. So
Right.
they're limiting that risk that they have.
Yeah, between the non-renewals that
Correct.
eventually happen, or if they're not writing new policies, if I'm with Farmers, I can't go to State Farm, but if I'm with State Farm, I can go to Farmers.
Correct.
And so they're going to lose their amount of their share. And so look in your crystal ball and tell me what happens here. Do State Farm and Allstate leave the state entirely, or is this a temporary political move so that something else happens?
They're both very big companies and very well known. I don't see them leaving the state entirely. I see them minimizing their risks, what they have, maybe for a couple years, and then coming back into the marketplace. For example, Allstate hasn't written a true Allstate homeowners policy in probably 12 years.
Oh, wow.
They have little sub companies that they write it through, like Safe Flight, Tower, things like that. That they have new filings with the state, with new rates, and so they're able to do that. But I don't see them getting out of the state entirely, but it does significantly impact everyone. I mean, in our office right now, we're probably getting 4 calls a day for people who are being non-renewed. I've written through some other insurance companies like Aegis and such, which is non-renewing some manufactured homes. So that puts more work on us as an agent, which we accept, freely with the challenge and stuff, because it is challenging, probably some of the most challenging I've ever done, to find another carrier, to find the best fit for our insureds, basically. And that, we can do a better job with a couple days notice versus we need this by 5 o'clock today.
Yeah, that's something for all of us to remember. Agents too. I know, speaking for myself, sometimes we have this, like, I guess for lack of a better word, this expectation that insurance is just going to automatically happen.
Right.
And these days, as we all know, it just doesn't. And so that's something I've tried to get better at, setting those expectations, not only with myself but communicating that to our clients.
And I think that's such a great takeaway for clients. I mean, certainly we're gearing this towards agents, but also consumers, so that they can understand. And a couple of takeaways that I have. Number one, get out in front of this. I think that agents have a tendency to feel like, hey, we're getting your loan in order, we're getting your appraisal in order, we're doing the home inspection, we're reviewing disclosures, and sometimes it's near the end that the lender will say, hey, by the way, we need insurance, so go talk to your insurance provider and get it. In North County Inland, but even in other areas, I own a rental property in Carlsbad. We got non-renewed, and I didn't realize that there were fires in Carlsbad. So just those types of things. Number one, get out in front of it. Number two, speak with somebody local and work with. Would you say a bigger company has certainly more ways to navigate in the insurance world as things change?
Oh, definitely. Yeah, definitely. And something that we always offer our real estate agents and such that we work with is, if you have a property that you think there's going to be an insurance concern, give us a heads up. We'll be happy to put some rough numbers together for you, so that when you have potential buyers, at least they know about what they're getting into and not surprised once they get the email from us what their numbers are.
Yeah.
Because sometimes it can be really surprising.
Yeah, and that was the last thing I wanted to add. I know that we get surprised too. Debt to income ratios, people kind of get their payment, they get comfortable with their payment prior to having the insurance conversation.
Exactly.
Then they have the insurance conversation, and it could be a disparity of $400 a month. With a lot of people, that's a big number, to try to mitigate monthly. So definitely have the conversations early and often.
I love it. Amber, thank you so much for being here.
Thank you for having me.
Thank you for joining us. We hope that you were able to get a little bit of information, and absolutely look to reach out to us so that we can help you accomplish all of your goals. We'll see you next time.